Hey guys, welcome back on the channel. So this is a portfolio example, $100 something. A couple weeks ago, if that 1 week and a half ago, it was worth $90. So you gotta understand that when you're providing liquidity, your value will go up and down. I don't care all that much, that is, about PNL, because I'm yield farming this for the long run. On September of past year, when I was doing PancakeSwap videos, because PancakeSwap deployed very profitable liquidity pools on Solana, I was yield farming most of these pairs. Yes, the market did crash from there up to today, but it doesn't mean that we stop earning as liquidity providers. I'll give you a very simple example. So in this portfolio, my biggest position is cards, which is a token I have been holding since last year. So I wasn't all that much bothered. Well, it's not good to see the token crashing 90%, but as long as there's some utility behind it, you know that the project won't be abandoned. There's definitely a lot of risk when it comes to this, and you gotta know what type of tokens you are willing to hold for the long term. That's why I keep saying go for blue chips if in doubt, or if you are just a complete beginner, because blue chips will bounce back. Solana did so from the last cycle. They went from $30 to $200 something. So when you yield farm them at the bottom, you will actually earn more. So this is just an example, of course. I don't think this is all that much high risk, although I have a substantial amount here allocated to a token which is not a major token on Solana or anything, but I like the utility that cards has. Last year when I found out about the token, I did a video about it. So it is a token that has been around for a long time. I think the market that they do provide some utility to, it's a market that has extreme value. This is about collectible cards, etc. But if you look at this portfolio overall, you notice that I'm not allocated into something that I think it's going to crash overnight or in a short span of time. All of these things have been around in Solana for quite a while. They're bottomed out, and I think from here on, it's only a matter of going up. Of course, I can be wrong. Don't take my word for it. This is not financial advice, but this is my idea, right? So I have exposure to this token because I believe in it. I'm yield farming it for the long run. You can see since when this position has been opened, the position duration, 16 days on this one, 20, 20, 16. So I'm still short of 1 month, and I'm already yielding very close to 7%. Actually, like I said, when I opened these positions, my overall holdings were under $100. They were virtually at around $100. The estimated value yield, it will fluctuate. Right now it's at a low. It's yielding 0.25% a day, so that's around 30 cents. But at some point in time, it can go over $1. At some point in time, it's at a low. On average, I can tell you it's 0.3, the estimated daily yield. So that translates into a month. Let me go here and see. So overall, in a span of a month, this is expected to yield me 10% at the very least. Like I said, sometimes it hits $1 daily yield. The estimated yield in percentage goes up to 0.5% in most of this, if not above that, and very close to 1% a day. So it's somewhat of a conservative position, but look at the allocation that I have here. So cards is a personal bet, Pump is infrastructure, and it's paired with a stablecoin. Fartcoin is a flagship meme on Solana. Paired with Sol, this can yield up to 1% a day or more. Sometimes it has hit that, I can tell you already. Camino is also utility on Solana. So I would put it in the same category as Pump. These are utility projects on Solana, so I don't consider them as high risk as I would consider Fartcoin, for example. And then there's Useless, which I would put in the same category of Fartcoin. It's a meme coin, but they have grown to the point that I don't think they're going to crash to zero. And then there's a couple others. So I'm having these pools as sort of a testing to see how much they can yield, and potentially I will deploy some liquidity here as time goes by. You can see here from the position range, most of my ranges here are either at the middle or very close to the bottom, because I'm also playing with the price appreciation over time. So this one with Useless, I'm hoping it to go up to 300% from current market price. And for that small of a position with such a wide range, I don't think it's yielding all that bad. Right now, it's a low day. So usually this can yield 0.3 at least, up to 0.5 or more. But these are just examples, guys. Would I say start doing something like this? Well, if you have a couple $100 to spare and you don't mind risking them, yeah, sure, test it out. get some experience, go with wide ranges. If you see, most of these ranges are double digits, if not triple digits, and they're having a really nice yield. Everything here is above currently 0.1%, which is really good. Still, this can yield at least 10% a month expectedly. But right now, I'm already earning 6.5% a month on average. This will be higher because my older positions here are 20 days old and some of these are a bit newer, so we gotta average things out. I probably should have started this everything in the same day just to show you, but this already gives you an idea. 2, 3 weeks old, 2 weeks old, 3 weeks old, 3 weeks old, and 2 weeks old. Everything put together, I'm talking about 6% yield, and I have a mix of tokens paired with Solana and USDC. If you want something more stable, more conservative, go with stable coins. Pair Solana with a stable. I did a video not long ago about crypto infrastructure. If I would want to deploy a portfolio, actually I'll do that in another video from scratch, but if I would want to start a portfolio with an exposure to crypto infrastructure on Solana, I would start going here on pools that have Solana paired with a stable coin. That is going to be definitely a winner. And then there's things like ORCA. For example, I don't even have a position here on ORCA, but ORCA can yield quite nicely when paired with Sol or with a stable. So you see, for example, this one, it's a 2% pool, 1.2% earned for the past 24 hours. Again, guys, these will fluctuate. Don't get too caught up in it. Then here, ORCA paired with Sol, 0.65% pool, and it's earning over 0.5% daily yield. And this is infrastructure, right? So you can see the potential here. Outside in ORCA, I like Pump, that's why I have it here. I like Camino, there's also Jupiter. So actually, let's go here, see what type of GLP and Jupe. You can find both are tokens associated with Jupiter. GLP is not earning anything crazy as of today, but let's see Jupe. All right, so Jupe is also the same thing. Not a good day today in terms of volume, so that's also reflecting here in the yield, of course. What else could we find that is infrastructure on Solana? For example, Ray paired with USDC 0.8%, Ray with ORCA, this would be a really interesting 1.8%. Ray with Sol, a bit lower here. If I would be interested in this one, I would monitor it because right now it's very low yielding. Anything below 0.1, I would test it out. I would open a small position with a couple cents just to monitor it for the next couple of days. Actually, that's, like I said, what I was doing here with all of these pools. And then I can see consistently that, for example, Pango and Fartcoin paired with stables, they will also work very well paired with Solana, don't get me wrong. But these ones paired with stables, they're consistently yielding over 0.5 up to 1% a day, sometimes above. On the weekends, it will be lower than that. So weekends definitely impact the volume. Also do account for that. Expect always to have a lower yield on weekends. But yeah, you get the idea. Find infrastructure that will give you more reliability when holding, when you see markets going down and prices going down 10, 20%. If you're holding something like ORCA, like Radium, Jupiter, Camino, even Pump, these are things that offer real on-chain utility on Solana, so they give me more reassurance to hold them in the long term. And for example, I can use cards as an example, but let me use actually Pump, because Pump is also a bit far from all-time high. So let's go here on the liquidity terminal. I'll show you how much this dropped since last year. So this was an all-time high that they met when they integrated the buybacks using the fees of Pump Swap to buy back the token. So you see, this is when the token launched. It crashed, a bit of a comeback, down again, and then the buybacks turned the whole table and it went up to establish all-time high. So from all-time high, we're a bit down from that. That's why I have such, you see here, the liquidity position. I'm predicting we're at the bottom and it is going to go up. If I wanted to get more yield, I would lower my upside. I think Pump can go definitely up. It's only a matter of getting into a new bullish cycle, Bitcoin getting through all-time highs. It will bring everything up together with it. Solana, as Solana goes up, all of those major infrastructure on Solana, and actually if Bitcoin goes up, it will take everything with it, not just on Solana, right? So don't get me wrong, but since all-time high, we're down something like what, 80%. Right now it's not the most actively traded token, but still it has some nice yield. Roughly $20 worth of liquidity have yielded so far a very interesting amount. And by the way, I haven't yet collected any of these fees in case you're wondering. And on the upside, I'm just, what, 40% away from the upside. So since this position is really small, it's around $20, I didn't go with a very wide range. But if I would deploy a couple hundred here with pump, then yeah, probably I would widen it up a bit further to here, maybe this level. And right now I would just compound if you want to play it for the long run. If you want it to generate cash flow, then tighten up your ranges. It will increase your APR. And this one just goes to proof. I mean, a very small position deployed here with a somewhat wider range, it's already earning a substantial amount in terms of percentage. So you can get an idea of what even $100, a couple $100 can do. If you are more conservative, look for pairs with stablecoins, pair Solana and other infrastructure tokens with USDC, for example, and start testing things out for yourself. So this is just an idea, guys, not financial advice once again, but this goes to show the potential of yield farming. Where else in traditional finance can you get something that yields you over 5% a month? And providing liquidity is just supporting on-chain activity. As simple as that. It's not magic internet money, it's not sketchy money, it's earning fees from people that trade these pairs. Anyone, anywhere in the world can do this. Alright guys, so I decided to just give it a couple more days since the moment I recorded the video I just showed you in order to give you an update on the position. So I was planning to do this update when the pending yield reached $10. That's the case today. Like I said, estimated yield right now, it's the double than what I was showing you, 0.55%, 71 cents. So it's like I just said, it will fluctuate. It depends on market activity. And right now, this portfolio yielded 10% in a matter of 3 weeks, 22 days on average. I just did the math. From all of these main positions, everything put together, it's 22.5 days, something like that. So let's call it 3 weeks. That is how long it took me to get 10% yield on my portfolio. Again, the portfolio at some points in time, it went below $100, but all the LPs that you see here started with $90. Everything put together combined, they made up for $90 in value. So if we consider that initial, the pending yield is already over 10%. The thing is that as your total portfolio value fluctuates and goes down, the yield will also go down. So everything that is volatile, everything that is not stable, that is, it will also go down. And right now we're very much doing really well because, like I said in the video, I think we were bottomed out. We are still bottomed out in the market. So it's pretty easy to see things go up and everything here is on the green. So that's a good thing. So yeah, guys, just quick update to show you the potential and how fast and the type of yield that you can get with not that risky of a portfolio. Of course, you can call this risky. Depends on your perspective. If you're just planning to yield farm on blue chips and stables, this is going to be much riskier compared to that. So if you are more conservative, stick with stablecoin pairs, stick with blue chips, Solana, Bitcoin, Ethereum. Maybe infrastructure, allocate a small percentage of portfolio to infrastructure, but I'll probably show you examples of that in another video. I hope you took value from the video, guys. If you have questions, drop them in the comments below. If you want me to do an example of a portfolio just dedicated to crypto infrastructure on Solana or any other chain, let me know in the comments. I'll probably do that video at some point in time, but if I know some of you are interested, of course I'll give it a push. So that being said, guys, thank you for watching. I'm going to wrap this one up. Take care, keep exploring crypto. I'll see you in the next one.